Kia ora and welcome back to this example on Steve's Pet Shop. This will be a transaction analysis all the way through to general journals and to a trial balance, and this will be covering everything on this example in front of us. So at the start of this question we have the balances. They will be used later, but we do have this question mark over capital, and what we do need to know is where the capital is coming from. So the capital at the start of this question is a question mark, so we have to work it out. And how do we work out capital? It will be assets minus liabilities equals capital in this case. So we're going to look at bank, inventory, equipment, and accounts receivable all being our assets, and our liabilities are just the bank loan and accounts payable. And if we work that out, capital will come to a nice round figure of $64,000. Perfect. Now we can get started on our transaction analysis, and as we have done in every single example, we're just going to run through these questions pretty quickly because in our previous videos we do have most of these already done. Okay, so I'm just going to say the 3rd of, I'm just going to write up here June, and then I know every single date below hand is June. So on June 3rd, we paid wages. So wages is going to be our debit account and bank will be our credit account, and that will be $200 each. On the 5th of June, we have bought equipment for cash. So equipment or PPE will be our account, but equipment in this case, as we know, follow on that we need the bank. It's number 2 at $8,280, 8280. On the 20th, we skip all the way to the 20th of June. We received cash from a customer on account. So if we received cash, remember that's one of our trigger words. So that means bank. 4,000 is going to go up, and they no longer owe it. So it's going to be accounts rec is our 4,000. Okay. On the 22nd, we sold goods on credit. So sales is going to be our thing. So accounts rec again. And sales, accounts rec will go up to 990. Okay, and as you can see, we can go through all these transactions pretty quickly and get this done. So we withdrew cash from the business, so that's drawings and bank, and on the 25th, purchase goods on account, so it's going to be purchases and accounts payable, which is 5221. And 27th is we sold goods to customer on account, so again it's the same as the 22nd, so it's going to be accounts rec and sales, and 2116. Return goods, remember purchase returns is a contra expense, which means it's going to have a credit balance. So we need to work out what other account is affected here, and it says pretty clearly here refer to June 25th. And on June 25th we used accounts payable, so that's going to be our debit account. Accounts payable is going to be our debit account. And our credit account is actually going to be purchase returns. But for the sake of this video, I'm going to put returns in brackets. Or am I? No, we do have a purchaser accounts later, so we can keep that way. And the 30th, there's actually 2 transactions, so we can just write the 30th month. We paid the account at the 1st of the month. So what we can do is just go accounts payable, 3,000, bank, 3,000. And our last transaction there is on the 30th as well, where bank goes up by 8,510 and sales is 8,510. Perfect. So the reason why I've got this camera so high is because I need to keep those transactions in line with us now. Because what we need to do is use these transactions. We can kind of hide the top for now, and we're going to use these transactions on the left-hand side to do the right-hand side. So for our first transaction, we're going to find wages and bank, okay? So we're going to find those two accounts. As you can see on the right-hand side of my screen here, you have got bank. So I'm going to use that one first. But before we get into the first transaction, this is a common mistake that we forget to talk about the balances. On the 1st of June 2015, as the top says up here, the 1st of June 2015 says this really key idea that bank had an opening balance of $40,000, okay? So we need to put that in. So we're going to go up here and go the 1st of June is the 6th month. So we go 1 of the 6th. Okay, that is what's happening there. And we're going to write balance. And our opening balance is $40,000. Okay. And again, we should, while we're here, let's just go through and do all the accounts that are at the top and put our balance in. Remember, if it's an asset, it's going to have a debit balance to start with. Okay, so remember, inventory, equipment, and accounts receivable all have a debit balance. And that is on the left-hand side. First of the 6th, and that will also be balanced. Okay, we can also go through and just over the page, you guys in your book will see slightly differently to me because I've just printed this out, but accounts payable also need the balance, and accounts payable is going to be on the right-hand side due to it having a credit balance. Same with loan. And loan is 10 grand. And capital, as we worked out right at the start, has a balance of 64,000. So step one's done, and step one is doing these transactions here. That's ticked off. That's ready to go. So next bit is entering these transactions into the relevant journals. And I've stayed on this page because we've got wages here. Wages, as it has an expense, it will not have an opening balance for the period. So we can just crack in and get straight started on wages. Okay, so wages on the 3rd of June, as we can see, we've debited it here, so we need to debit it here. So the 3rd of the 6th, this is where people get confused. We're not going to call it wages because this is a wages account. We need to recognize where the money has come from. So we're going to say bank 200. Okay. Now, in the bank account, we're going to take back over this page. So go back a page in your guys' book. And you're going to write the 3rd of the 6th on the credit side, and you're going to go wages because the bank account has gone down. And to make the bank account go down, we need to credit it. So transaction number 2 is on the 5th of June, and equipment. So we're going to find the equipment account, and luckily this is all on the one page. So equipment here, we're going to go the 5th of the 6th because that is June. We're going to write bank. Because again, we need to know where it comes from, 8,280. And again, in the bank account, we are going to credit equipment of 8,280. Okay, the next bit here, bank transaction on the 20th, bank goes up, okay, because it gets debited. So what we're going to put is the 20th of the 6th. We're going to call it accounts rec, okay. If you're doing this in an examination, obviously you need to write out the full correct term that it is accounts receivable. I'm just doing accounts rec at the moment to save time. So that will be $4,000. Okay, and then we need to find wherever our accounts receivable account is, and luckily it's at the bottom of this page. And accounts receivable no longer owe us that $400, so it's going to be a credit balance in that account because they no longer owe us the $4,000 they have paid us. Question number 22 is accounts receivable and sales. So accounts receivable is going up here, remembering that we are going to call it the opposite name. So we're going to call it on the 22nd as sales, okay, because now they are owing us more money 2990. Then we have to find the sales account, and it's luckily on the bottom of page number 2, down the bottom here. And so what we're going to do, remember sales is income, and as we know, it's on the right of the equation. And so we're going to enter this into the right-hand side of this book because it is a credit entry. So again, we're going to write the date, 22nd of the 6th. We're going to call it accounts rec because the sale is on credit. And we're going to put our total in the right-hand side. Again, sales, like wages, will not have an opening balance because it is an income, and we have to attribute that to the year that it is in. Okay, so moving forward to the 23rd, we're going to use drawings and banks. So drawings is not on this page, but we're just going to use bank while we have it here. So if we have a drawing, we're going to remove money from the bank account again. So we need to credit it. So the 23rd of the 6th. We're going to call that drawings. And again, that's going to be $500. Okay. Then we need to find the drawings account, which will be over a couple of pages in your workbook. Oh, no, it is at the top of that page there. And drawings is always going to have a debit balance because remember, AED is on the left-hand side of our equation. And again, we are going to call it the 23rd of the 6th. Remember, we are identifying where that money's come from, and it is from the bank account. Okie dokie, coming back to the 25th, purchases and accounts payable are our two accounts. We're going to find accounts payable. Luckily, it's right here below drawings. Accounts payable, we've purchased more on credit. So what's going to happen is on the 25th of the 6th, we are going to write purchases in this account because we need to know where those have come from. Okay, and we've purchased $5,221 more on purchases. Okay, now we find our purchases account, which is luckily just over the page here. And remember, purchases is an expense, so it's going to have a debit entry of accounts payable. Again, like wages, it will not have a opening balance. Perfect. Moving forward on to 27th. We are back into accounts receivable and sales again. So it's the exact same entry as the 22nd. So we're going to do the exact same thing. We're going to go on the 27th of the 6th. We're going to call this sales again. And we are going to write in 2116. Okay, and then we're going to find the sales account, which is here, 27th of the 6th. Call it accounts rec. And 2116. Perfect. On the 29th, this is when it gets a bit tricky because we are removing money. Okay, so what's happened here is they've returned items that have either been bad or gone off or broken in transit. So they're sending them back to the supplier. So what the supplier does is they make their account, they lessen the amount owed to them. So what they're going to do is on the accounts payable account, we are going to debit entry it. Okay, so on the 29th of the 6th, we're going to call this purchase returns. Okay, I'm just going to write RET to fit the space for you, and that's going to be 115. So as we can see there, that 115 will lessen the amount owed to the company. Then over the page, purchase returns again is a contra expense account, so it is going to be credited because it is the complete opposite of purchases. So on the 29th of the 6th, we are going to call this accounts payable and put 115 in there. Perfect. And our last entry of the day before we get onto this trial balance, which is going to be pretty simple to do, we're going to jump up to sales. Oh, there's two transactions here before I forget. The first one is paying us accounts payable. So the 30th of the 6th, we're going to go accounts payable, and that is $3,000. And our other one in the bank account is the sales, which is a cash sale, so it goes straight into the bank account. Just remember to date that. Don't be too lazy there and get it done. Okay, so then we have to find our sales account. Again, we're going to write the 30th of the 6th. We're going to write bank because these are cash sales this time. And we are going to put in that 8510. And remember, we have to find this accounts payable. And just update. Oh, see, easy mistake to make. We need to follow the transactions. So this one is actually going to be on the debit side because we no longer owe them the money of $3,000. And you may think, yeah, we're done. No, we are not, because what we have to do is, for this last bit, is create that. What I can do, though, is get rid of the sheet here. We do not need it anymore. What we do need is these accounts, because what we need to be able to do is work out the balance in each of these accounts for our nice trial balance. Okay, so what we are going to do is we're going to have a look at our bank account. We're going to work out what side is bigger. And just by looking at that, you can probably work out that that left-hand side is bigger than the right-hand side. So what we're going to do is we're going to total the left-hand side, or the debit side, and we're going to do a solid line, and then we're going to double underline it, okay, just like that. So that total comes to, in my book, $52,510, okay? And what we need to do there is actually balance this off. And I can tell you now, we've already made a mistake, because that cannot be in that line. We're going to put it one more line down, because why isn't it fun? So 52510, and on the right hand side, we're going to have that same total as 52510. But you may be thinking, sir, that doesn't make a whole lot of sense, because those four totals there does not equal $52,000. It's because that is the balance that is going to be transferred to our trial balance. So on the 30th of the 6th, we balance these accounts. We're going to say balance. Okay, and that balance is going to be $40,530. Okay, and that comes from literally minusing the minusing off the four transactions from the total. Okay, that balance is going to be transferred to the income statement, the trial balance, which we will do on this back page. Okay, but let's just balance all these accounts. There's only one transaction in the inventory account, so we're not going to worry about that. What we are going to do is balance off the equipment accounts again. What we are going to do is add those together, and it comes to a nice $20,280. That means our balance on this side must be $20,280. And again, that is on the 30th of the 6th, because June has 30 days. Again, total that off. Before I forget, gentlemen, we do also need to open an account for next term. So after the 30th of June, remember, is the 1st of July, and we need to reopen these accounts with the balance. So we're going to write the 1st of the 7th, okay, and we're going to go balance. And that is the total that comes from there, which is $40,530. Inventory can stay as is. And again, on the equipment side, the 1st of the 7th is balance. As you can see, when we open the accounts, we had a balance. This balance here is just showing what it will be at the start of next term. Okay, the accounts receivable. So again, we find what side is bigger, and clearly the one on the left-hand side is bigger, as accounts receivable always should be, because we should be in debit balance. Okay, so what is our total in the accounts receivable account? Is $25,106. Okay, so $25,106 minus 4,000 is 21,106, and again that is going to be called balance, and that is on the 30th of the 6th. So again, we can drop down to the the 1st of the 7th balance, and that is 21,106. Okay, so those are those four accounts locked and loaded. I'm just going to put these over there so we can work on the next accounts, and then I'll bring them back in shortly. Again, drawings, there is only one transaction, so we do not need to balance that. Accounts payable gets a bit tricky, because we've got one side that's worth X amount, one side worth the other amount. So what we're going to do is we're going to total what one is bigger. And again, accounts payable, remember, it is a liability, so it should have a credit balance. So we're going to total up the credit side first, and the credit side comes to $8,221. Okay, that means on the right hand side we have a balance figure. Again, the 30th of 6th balance at $5,106. Okay, which equals our 8221. And again, because this has a credit balance, we're going to open that balance for the 1st of the 7th, and balance is 5106. Okay, All the other accounts, the next two have only one, or the next three only have one entry, so I'm pretty happy that we can move on all the way down to sales. Okay, sales, if we total that up, comes to 13,000. Okay, 616. Okay, and that is going to be our figure. So again, we're ruling above, ruling below, and double underlining the bottom because it is a final total. Okay, on the left-hand side, it will have to equal the same. And there is no entry here, so all we're going to put in is a balance figure. 13,616. And that is us nearly, because we have to just remember to open that for the next month. Okay, at 13,616. Perfect. Okay, the next two accounts are, as we say, they're only one transaction, as you can see, so we can leave those as they are. Now, this is the tricky bit. What are we going to put into the trial balance and why? Okay, so what we're going to do, it does say trial balance as at the 30th of June 2015. Okay, so this transaction here has been going pretty smoothly so far, and I know we're 20 minutes into a video, but this is the crucial bit. How do we transfer these balances across? So, the bank account, we are going to use our balance figure. So this is why we've balanced all these accounts, because we're going to go through one by one and put them into our trial balance. Yes, our balance is on the credit side, but we are going to transfer that to the trial balance, and we're going to put that as a debit balance because it is the actual total that the debit side is up. Okay, so what we're going to do is we're just going to write bank as our first account. Our first account has $40,530 in it. Okay. Our next account is inventory. As I say, there's only one entry, so we can just put that straight in there. So inventory at $5,000. Okay. The next one, equipment. We're using the balance figure, so it's going to be equipment at $20,280. Okay. The next one is accounts receivable. And that balance figure there is $21,106. Okay. Drawings, which is on the next page, so we can get rid of that page again. Drawings, which only has the one entry, so we can chuck that in, 500. Okay, the next one is accounts payable, and this is where people get confused. Accounts payable, remember, is a liability, so it needs to have a credit balance. So we're going to chuck that on the far column here. 106. Again, we know loan is a liability, so we're going to chuck that over at 10,000. Our capital, again, is an equity, and we know that's on the right-hand side of our equation, so it's going to have a credit balance. Okay, 64,000. Okay, wages. Okay, it has a debit entry, so it needs to be on the debit side. Our sales account, remember sales is income, so it's on the credit side at 13,616. Purchases is 5,221, and purchase returns is at 115. And now this is where the magic happens, and this is where you check you've got everything correct. If you total the left hand or the debit side for me right now, okay, you should get 92,837. Okay, and if magic works, which it should, and accountants love everything nice and balanced, you'll work out that the credit side also equals 92837. And that means we've done it perfectly correct and all our entries are correct. So that is how we do a transaction analysis all the way through from the start of the question on Steve's Pet Shop all the way through to the trial balance.